Hello and welcome to another edition of Around the Coin. My name is Faisal Khan and with me is my co-host Malani Kannan. So today we are going to be talking about financial inclusion, what it means, defining the basic understanding of what financial inclusion is all about. You'll hear it left, right, and center in all the articles, and everyone's talking about the unbanked. But Malani is, doing a lot of work in this thing. So Malani, why don't you introduce yourself and let's talk about the topic.
Sounds great. Thank you, Faisal. I'm really excited to be collaborating with you on this financial inclusion series as part of Around the Coin. And I think, just in terms of what we're going to be covering today, this is very much a back to basics episode where we're talking about what is financial inclusion, what does it mean, what's the framework around it in the world today. We've talked about it a lot. We're both in the fintech space, whatever that fintech space means, and we're so deeply immersed. We see startups around us, we see people looking for jobs in this area, but I think a lot of times people forget what fintech is trying to serve. And this episode is very much around that end consumer that the fintech space aims to sort of cater all these products and services to. It's for the people who are today, we call them, whether we call them underbanked or underserved. I mean, I'll go as far as to call them the 2 billion unseen in the economy, the ones we don't even know their movements or how they work because there's no way to capture how they transact. And these are the people we're trying to impact through access to basic financial services. And that's what this episode is about today.
Great. So let's start with the very basic question. What does financial inclusion mean? What is it? I mean, if someone is hearing the term for the very first time, and you say financial inclusion, that person raises their hand and says, "Excuse me, what does that mean?" What's the answer?
Right. So, this is a wonderful question because I think this definition has changed pretty much every couple of years. I think, Faisal, you'll remember this back in 2010, 2011, when people were talking about financial inclusion, it was closely paired with the term banked, right? So these were the unbanked, the people who didn't have a bank account. There were about 2.5 billion of them that I guess, institutions like the World Bank or the IFC were able to identify and say, we can't account for these 2.5 billion people. They don't have a bank account, and financial inclusion will mean that we convert them from unbanked to banked. Over time, I think over the past, 7, 8 years, we've seen that just handing people an account to transact with doesn't really mean anything. It doesn't mean that it changes their life in any way. It is not actually a benchmark for any type of inclusion. So this definition, I think, for the better, has taken a more holistic turn today, where we talk about people having access to affordable products and services in the domain of payments, remittances, savings, credit, insurance, and it's being able to sort of fundamentally give people a transacting account that they can use, that they can find avenues in their life to integrate with their life to be able to do all of these services a little bit better, a little bit cheaper, a little bit easier. There is a very clear component of digitalization to this. I think people don't expressly talk about it when they talk about financial inclusion, but a lot of this is being driven by whether it's digital identification or digital payments. It's being driven by moving things from cash to e-money, if you will. But that said, I think this definition is going to keep evolving. I feel like, when we're having this conversation a year from now, we'll probably even be able to add a little bit more dimension into what this financial inclusion concept is about.
I mean, I almost feel that it has so many facets. One facet is from the banking side. Hey, we'd love to get you on board and offer you financial services so we can make money. One facet comes from the government side. Hey, if you get them out of the cash economy and bring them onto the digital economy and get them banked, we'd like to get taxation going with them. Even though we may be directly be doing indirect taxes with them, but basically getting taxation. And then there's the whole banking cartel. And let's not beat about the bush and say it exactly right. So you have 2.5 billion people, and they keep talking about the next billion opportunity, the next billion people opportunity. And that is basically, hey, you get 2.5 billion people more to contribute towards the bottom line, and why not get them? But my questions, maybe a little more refined, would be, why is it that we have 2.5 billion people unbanked or underbanked or whatever the nomenclature may be? Why is it? And why haven't we been able to close the gap? I'd like you to give me an opinion on that, then I'll give you my viewpoint as well.
No, absolutely, Faisal. I think this is one of those questions that's really worth thinking about and debating about. And I'd almost encourage everybody listening to this episode to also share with us their comments on why they think that, you know, in terms of closing this gap or making this making a step change on this front, we haven't been able to really get there yet. Personally, I feel, initially when we were tracking this, so just to not negate the progress that's been made over the past 8 years, right? So in 2011, these numbers of people who were unbanked or not having a transacting account was 2.5 billion. Today, if you look at the statistics, it's 1.7 billion, right? So there's this real sense of progress, that about 800 million more transacting accounts have been added into this world. Is that meaningful? Is that number meaningful? Is that contributing? I would say, in certain economies, you really see that it's been driven through a comprehensive framework. It's exactly like you talked about. There's, the sort of public-private sector partnership. There's a lot of regulation and sort of legal frameworks around it that makes these accounts meaningful to the subscribers who have them. They're able to integrate them easily. They're able to navigate a new system because they're also being educated on it. But for the most part, that's not the case. You kind of see these as isolated efforts. And this is sort of the critical issue here, is where, public and private don't necessarily collaborate on their efforts. And you've got every person trying to create a new wallet, or trying to create some kind of transaction account, but it doesn't have the legitimacy or the broad base that is required to get, the tens or hundreds of millions in that economy out of poverty. So I think there's just a mismatch of efforts and resources that's contributing to this larger structural problem. But I'd love to hear what you think about it.
I think you just hit the word, and I agree with you. It's getting them out of poverty. So the way I look at it is, the 2.5 billion are unbanked, and we did a show on this thing a little earlier on, where we debated the same thing with Brian and Mike. Is that, I feel one size does not fit all. So yes, you had a financial product, you had a mobile phone or a mobile app, mobile money, etc., and that has gone and been utilized, and everyone is sort of, signed up for it. But then the market segment, the very bottom of the market segment, the people who can barely afford to put, two square meals on the table a day, are living really below the poverty line. Some of them don't even have access to maybe a one complete meal a day. Telling them that you need to go sign up for a bank account is going to change their lives is almost hilarious in some manners, because if you go out in the field and you look at it, these people are really, really dirt poor. And you say, no, 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 come here, get out of the mud, come here, sign over here, get this piece of paper, and now you're banked. Now suddenly we're going to, uplift you out of poverty. I don't think so. That's the solution. I think we need to go back to the drawing board, look at more innovative ways of uplifting these people, and then saying, okay, how can we make them maybe appear as a very small blip on the radar as far as banking or money is concerned. Just to classify a World Bank definition or an IMF definition or a central bank definition that we suddenly have from 1.7, now we've gone to 1.2 billion, is not enough in my opinion. I feel that there is a much greater problem in this thing, because the 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 last few numbers, the last billion or the last 2 billion, is going to be even more difficult to get banked. I feel there are many socio-economic problems that come with that equation, and solving it, I think, is not going to be solved using the traditional approach that the banks have taken, or the mobile money operators or network operators have taken. And that's my viewpoint.
Yeah, absolutely. I think you said it really well when you said it's not a one size fits all. And what we've seen in the world today is people sort of looking at successes in isolation. Like I would look at, Alipay or WeChat or M-Pesa, and then attribute that this format could work for all the other countries where these products don't exist. These are not products that are similar to each other, and they're definitely hyper targeted or hyper contextualized to the economies that they were developed in. And then, just thinking that you could pick it up and replace it as a concept in another economy doesn't do the job here.
Well, it's the proverbial equivalent of exporting democracy, right? I mean, that's that's the example I would give. You can't just take your way of thinking or your way of doing things and just try to juxtapose it onto another different economy. I just don't think so. It works that way. I think we really need to go out and see why and how. Well, let's say start with the how. How does the very bottom, though this 1.7, 1.9, 2 billion people, how do they interact with money? Where on their daily priority list of priorities is money? Is it number one, is it number two, is it number three? And how do they interact with it? How do they circulate it amongst their economy or amongst their peers and so forth? Geographically, how are they moving? And I think that problem has probably been these observations have probably been recorded at great lengths, but I feel they're just sitting in some really excellent, study in someone's shelf and not being utilized. I don't think so. We need to go reinvent the wheel, but I think we need to go see where these studies were done. For example, in Pakistan, in India, in Bangladesh, in Afghanistan, in Iraq, Jordan, Nepal, Sri Lanka, Maldives, a lot of women who are not allowed to have phones because their brothers or husbands won't allow it. It's as simple as that. And how do you change that aspect? It's very difficult to do so. In the Middle East, women are not allowed to go outside and sign up for financial services. Those specifically those who are not so well off. I mean, we think of Middle East and we think of Rolls Royces and oil and all and things like that. But that's not the case. There are many, many, many people who are citizens of those countries that really are living a poor life, but they also have a very controlled life. They're told what to do. So in Egypt, for example, many women are not allowed to have phones, and same thing with Bangladesh, same thing with Pakistan. And the reason is, my brother won't allow it, my father won't allow it, my husband won't allow it. So how do you bring them into the banked world? Because the easiest way to bring them into the bank world is through mobile money, not through taking them to the bank, to a bank branch and having them signed up, which by the way are diminishing by the day.
Yeah, absolutely. And I think you raised a fabulous point. The debate around financial inclusion is really closely tied to the debate around gender equality. And, in terms of even things like the United Nations Sustainable Development Goals and stuff, where gender equality is one of the 17, and sort of you see the theme of it across all the other goals. Financial inclusion is absolutely tied to that, like allowing women to transact, allowing them to potentially think of themselves as entrepreneurs in the future, or just financially independent. These would be so critical, and broad-based knowledge about how this is happening in these economies today, like what are the social norms, or the psychographic elements of how people even view things like savings and credit, are so different. Not everybody, for example, is raised across all economies to think of borrowing the same way, right? Some societies are more conservative on borrowing, some are a little bit more, some in somewhere where you have now, increasingly the emergence of like Sharia products. You have to fundamentally reimagine the product itself, because it needs to be compliant with a lot of other norms that the society is following. But these are all, this forum is exactly why we need to have these conversations, because a lot of the efforts today feel like they're a bit in silos, and that's my biggest sort of worry with where we're going with financial inclusion.
So, just taking cue on the original definition. So, what are some? I mean, how does it work? What are the building blocks?
Right. So, we've touched upon a couple of them before, but just in terms of the building blocks, I think it's very important to have this understanding of where the public and the private sector play, and how they commit towards these goals. It's a one goal, and what's the part that each is playing. I mean, we've seen it when we work in fintech, a lot of the work is being done by the private sector, right? But it's in the context of sort of the public sector defining the regulatory framework for it, and ensuring that sort of the agenda is being driven towards certain three or four like core KPIs. There's also the need to have sort of clarity on that regulatory framework, especially when cross-border elements are involved. I mean, remittance is a classic case in point here, or lending is involved, another a place where there's a lot of today, I think, still uncertainty on what is and isn't allowed. And then there's infrastructure, and infrastructure is, you talked about it earlier. It could be telco infrastructure in the form of mobile money operations being done by the telcos themselves, or it could be financial infrastructure, which would be banking or third party wallet providers. But you put these all together and you finally got at least a space within which then private sector can play in to start to A/B test some of these products and launch them. I don't know. Did you want to sort of, did you feel like I missed anything over there?
No, I think it's okay. Why would the one thing I'm just a little curious is why would there be a need for legal and regulatory frameworks? Wouldn't they already be in place?
I think you're seeing a lot of, when it comes to sort of interoperability, right? The big discussion around wallet to wallet transfers cross border, or when you look at even cryptocurrency, which is, I guess, the hot topic for anything to do with regulatory. I think as people are sort of coming at it with different solutions and different, like, fundamentally different ways of translating cash into sort of e-money, you start to see that there's not a lot of clarity around how governments are going to be interacting with each other around some of these topics.
So is it a competitive space? Meaning, so who are the frontline players, and are they competing with against each other?
Right. I think a lot of them do compete with each other, but let's just say that because it's a bit of a growing space, I feel like there would be opportunity for all. I mean, we know banks are in this space, and they've been trying for a long time to access these 2 billion, unseen consumers. They haven't been as successful across all economies. They've sort of, when it comes to uh, dealing with it from the more, the cooperative financing, or even the sort of working capital loans required to run businesses, micro businesses. They've partnered with microfinance, they've partnered with cooperatives, or these have existed sort of individually as well. The big competition, I think, to this ecosystem would be the telcos. Increasingly, telcos are becoming banks and banks are becoming telcos, and you see that line being blurred, and you're not quite sure, you know even I'm not quite sure anymore, like who should be the right frontline service provider to these consumer class, because like you said, they're all connected to, at the base they all have a SIM card, right? And they potentially have some kind of a basic phone. Not all of them, maybe not each and every one of them, but it's more likely that they have this infrastructure already. So then the question becomes, are telcos then better geared to access them and educate them? You've also got, I think, increasingly, like, the agent networks, and agent networks come in the form of even things like the post office or the retail network. And then you've got card companies trying to directly skip people from, sort of transacting accounts to carded behavior. So whether this is in the form of like digital cards or even physical cards. So you've got quite a lot of players here. I think it's still, for me personally, I feel like there's still plenty of room to innovate on the service offering. So it's not as competitive as as sort of looking at purely price points and product features. There's still the opportunity to really innovate in the space, but I'm pretty sure the banks and the telcos wouldn't be agreeing with my statement here.
So, yeah, I mean, this is very interesting because you mentioned telcos, and one would think that telcos would have the upper edge, but then I can't stop thinking about, let's say, a Paytm, and that's not telco led, right? That's just happens to be a separate, financial services company that is very very ubiquitous all across, and it's not dependent on a particular telephone company or a cellular company, and anyone with a handset can use that. What about microfinance institutions? Do you see that they're also feeling the same pinch, competing against telcos, or does their network allow them to be, let's say, liberal and separated from being co-joined with the telcos?
I think so far they've been quite specific in their offering, and you're right to say that they've got that advantage of agent network that's allowed them to look at collections in a very specific manner. I think where everybody else fails, but microfinance institutions really do have the edges, is that they're sort of grassroots and they can really enable collections for the especially on credit products, right?
Yeah, and people don't
I feel.
understand that most of your life, the people that the people who are they're trying to bank or give loans to, they operate in a very restricted geography.
Mhm,
I mean,
absolutely.
it's not like they're going to be transacting with 40 towns and 6,000 miles away. They most likely are going to be transacting most of their money in a very small radius, maybe I don't know, 30, 40 miles at best.
Absolutely. And even we've talked about it in previous episodes. I think this idea that cash would still be for them. Cash is king. They still store it under their pillowcase. They're still very much don't have the faith or the trust of broader like governments and big institutions. And I think that's where microfinance has a bit of an edge, because you can put a face to the person who's lending to you. You know where to find them. You know how to have that conversation around, I'm not necessarily going to be able to repay you by the end of the week, but here's my portfolio of rice that I'm selling, or tomatoes that I'm selling, and then I'm going to come back to you by next week. So there's a very real element of, I think, high touch, the need for high touch environments and high touch education models that don't necessarily work at scale the way telcos or banks would have imagined, right?
So we've discussed the building blocks, we've discussed the frontline players, and they're ever present. So what is the products that they're selling in trying to convert these unbanked to banked?
Right. So I think the core of it would be, if you think about it in terms of a transacting account, the transacting account could do multiple things. Today, all the efforts are around, I would say, five pillars. There's savings. And this is just trying to convert people from not saving hard cash in their homes, to sort of think about digital savings as a concept that they get comfortable with. There's payments, which is just transacting, whether it's at the local market or sort of e-commerce. It's getting comfortable with transacting through the form of through a more digital means. There's of course the remittances, whether it's domestic or cross-border. Remittances are increasingly becoming sort of major economic indicators for an economy. So where your biggest export is sometimes labor, remittances become crucial to just having enough cash flow in the country, and being able to track them becomes important. There's credit. And credit comes in the form of microcredit, nano credit, and then even when you look into a business context, there's more sort of working capital financing and products like that credit sort of extends into. And then there's insurance, which I think is probably the toughest out of all the ones that I've mentioned, which is this idea that, if you are the primary um, breadwinner, then you need to be able to sort of make sure your family's going to be okay, God forbid something happened to you. And I think this concept is still very much a luxury for most people, when we talk about the 2 billion consumer class that we are hoping to serve here. And for me, out of the five, I see this as the toughest of the goals to achieve.
Yeah, for sure. And I think there'll be a lot of, for lack of a better word, products within the insurance sector that don't probably exist and would need to be developed from scratch to serve this very unique market. But okay, having said that, so we now know the blocks, we now know the frontline players, we now know the products that we'll cover. So what's the challenge now? What's the next thing? What's the job that needs to be done?
Right. And I think, we've alluded to it multiple times during this conversation, but just to sort of, put it all together, and also get some views from our listeners here. I think the challenge, or the big job to be done here is really re-examining some of these, the design of these products that are created, and making sure that they can be actually integrated into the lives of the people we're trying to address. So not looking at it as a one size fits all, looking at custom approaches that align with the way people are actually living. There's also a large part of it that just is the education, and it's not education by way of just having a couple of checklists, or how to use manuals. It's actually being able to um, you know very clearly articulate why this will be a benefit or a step up over the way people are living today. And it would have to be in language, in environment, in integration to how the rest of their family or ecosystem is transacting. There is what we've talked about, which this idea of having a lot of agent networks, or cash and cash out networks. And I think that's really important initially, to be able to give people the feeling of liquidity, right? Because for somebody who's used to just dealing in cash, and feeling or touching the money that they're earning or saving, when the first thing that's going to happen when you try to convert them into something digital is that they're going to get um, absolutely probably nervous about this idea that I've given my money to this entity, then and I can't get it back. So being able to show them that they have options to cash in or cash out. Um, and then I think the most crucial of all of these is how you build it up, because typically when you design a product, you start with maybe a payments product or a savings product, right? And if there's not enough options for that people to transact on it very quickly, to pay bills, to pay fees, to be able to remit to peers and things like that, if that escalation doesn't happen fast enough, you've kind of got people again with money stuck on a digital product that they don't necessarily know what they can do with, or how they can get it out. So I would say these could be a good frame to think about, when you design a new product, what you need to think about. But yeah, but there's probably plenty more in terms of actual lessons learned from the field.
Yeah, I agree with you. I think educating users to change behavior is an extremely important point you talked about, because they are used to, saving things in a little jam bottle or something, gold earrings wrapped in, some cloth, etc., or some silver that they may have, or valuables of such nature. And now you're asking, that there are more better saving instruments that they can use and avail with these service providers, and they don't need to keep this money. It will not get looted, it will not get stolen, etc. But there is a trust element, because you have to convince a lot of the old folks, people from the old school of thought, to let go of that, and accept the new one, this new method of saving that they are completely, I guess, oblivious to. But two questions. So, first is, how are we tracking financial inclusion? So, that's the first question before we end the show. And I have one more that I'll speak to you later on.
Right. So I think, in terms of how we're tracking it today, I'd say there's not a lot of global effort towards um, a single KPI, right? We've seen
But I
the
mean, I
17.
want to interject here that there will always be fudging of numbers by the government, right? So they want to make themselves more progressive, et cetera, et cetera, or in some cases not so progressive because they might get aid or what have you. And how? So when you measure the financial inclusion, tracking, how do you take that into account as well? I want you to comment on that as well.
Yeah, no, absolutely. So I think, you brought up a really fair point. I think there's a lot of statistics around it, and they're issued either by governments or by banks and mobile money operators, or the GSMA, IFC, World Bank, and so there's not in this field, there's not any sort of dearth of figures floating at you. You literally have to put a Google search on something like this, and you're going to get conflicting, contradictory reports, but a lot of reports. How do you measure this, and how do you measure it sort of very objectively? I think the only sort of benchmark for success is when you see the phenomenal kind of transitions that have happened in China or Kenya. You know, anything short of that, it starts to feel like it's a lot of players in the market trying to build products, but they don't really translate into the daily lives of people. And why do I say that? It's because these two examples, whether we look at Alipay and WeChat or we look at M-Pesa, they've been able to go beyond that initial, we just provide you with an account to transact, into branch out into all the services that we mentioned about, right? Savings, payments, remittances, credit, insurance. And you can't do that unless you've got a subscriber base, the kind of base that you were after in the first place, that has understood your service and is willing to accept your price point, and still looks at it as a step up from what they can offer. So there's no, when you look towards this 1.7 billion, that's the latest figure that we have with us of unbanked. Would by 2020, if this dropped down to 500 million, would we say we've done a great job? Probably not. Not unless there was actual proof that people in all these economies that we're targeting, which are, I think, 50 plus countries at the moment that are being targeted to drive these goals, are actually seen to use a plethora of services that they weren't willing to try before on products like this.
But let me, I mean, all these goals, the universal financial access goal that you have mentioned earlier was for 2020, I believe. And, it includes, that they want to bring people in for purposes of financial inclusion. So, yes, you have someone financially included. My question is, are they actually utilizing the system? They may have, let's say, I don't know, 10 rupees or, 10 Filipino pesos or $100 or $50 parked into the system, and that's about it. Do we consider them to be a financially included person just because they have maybe, let's not use the word an active account, but maybe a dormant account? So, what's your comment on that?
Hmm. No, absolutely. I think one of the key metrics that we've always been looking for, and it doesn't get reported as much as, you've heard a lot about this concept of active consumers, right? But what is active? Like the sort of the throughput on that wallet or on that account needs to be constantly moving. Like they need to be transacting, and they need to be receiving payments, or sort of receiving remittances. They need to be spending, they need to be paying electricity bills, they need to. And so you wouldn't necessarily measure it just by looking at that person's activity. You'd also sort of look at all the other services that were offered in conjunction, and see, are people paying their electricity bills, their prepaid electricity bills in these countries? Are they paying them through their wallets or not?
So it's
Are they
like a
able to buy?
multi-channel measurement that would give you that thing. Another and the last question I want to ask you is: so we are at 1.7, some say 1.8, but let's just round it up to two. By 2030, not 2020, which is just around the corner. I don't know how we are going to suddenly fix 2020, but by 2030, how much do you think? How many people will still be unbanked in the world? and I mean actively unbanked.
Right. Well, my hope is that, in the 11 years to come, we can absolutely get this down to zero. That's the hope. That's why we
Wow,
want to
you
encourage
are
more. I'm
really
an
really
optimist.
optimistic. Yeah, yeah, sure.
I am an
And
optimist,
you
yeah.
go to the field, and yet you're giving me this figure, because if you ask me, I feel that in the 11 years, if we then looked at active users, people who are actively contributing, and we take them out, I think when we look at the dormant users, we'll still have about a billion people left unbanked. That's my thing.
Right. I mean, I'm hoping that, this even this effort is, us urging more people to sort of actively contribute to this field, and our fintech peers to really keep in their mind and their heart the consumer class we're hoping to serve here. So, in that sense, I'm an absolute optimist towards this. I think, if we kind of push through, the next 11 years can be game changing. But a lot of the work needs to happen on that field, on each of these 50 plus fields, and it needs to be, highly sort of tracked and monitored, so that, and not with any other agenda, but for the fact that we want to get that number down to zero.
Malani, I know you go to the field a lot, and you probably have some amazing stories to share with us, but we will discuss that next time. Thank you very much for coming here. In the subsequent episodes, we'll talk a little bit more about the facets of financial inclusion and look at examples from around the world. Would love to hear your stories more then and share some of mine.
Thank you, Faisal. It was a pleasure.